Hey, what's going on, best ever listeners? This is John Casvin, and I'm here for the Multifamily Mastery Show, a part of the best ever commercial real estate investing podcast. Listen, I'm super excited to come and talk to you today. Today's guest is Pete Schnepp. Pete, how are you today?
I am fantastic, John. Thanks for having me on. I'm excited to chat.
Yeah, man, absolutely. Pete, it's great to have you on. Why don't you take a minute or two and give our listeners a little bit about your background?
Well, sure. Yeah, I've been in real estate and construction pretty much my whole life. I started off learning the painting business back in college, actually. And then that led to construction with some bigger home builders, learning it as an employee, and then a transition to being self-employed, getting my real estate license and starting my own contracting business. And then 20 years of grinding, fast forward to today.
I love it, man. How'd you get started initially?
In real estate or construction?
Sure. You can.
Well, I guess I got started initially in college it was an internship program that taught me how to run a house painting business. It was like an entrepreneurial program. And so that was kind of how I kind of started getting around construction. And then after I graduated, I started working for home builders in the field, as in construction management and project management. And so it was kind of there where I really, I learned about construction, and I guess my desire to own real estate started getting fueled because I saw all the wealthiest people that were having custom homes built already had a lot of real estate. They were in real estate selling it as an agent or as a lender. And, I guess that's kind of when my eyes opened and I realized, all right, well, the wealthy all have a lot to do with real estate, it seems like, and I need to start moving in that direction.
So you were getting involved back in college, right? So you're in that kind of internship / apprenticeship type program. You're learning about the trades, you're learning painting and all the other things. And as you're starting to get into these home builds, you're realizing, man, all these people seem to have way more real estate, whether it be rentals or lending. They're involved in real estate, and that light bulb kind of went off, right? And there's talk about success leaves clues, and you were there. You're able to see it, to say, okay, there's something about being on the other side of this. Talk about that transition, because it's one thing to be in the trades and to be around real estate. It's something completely different to be the person who's financially both responsible and accountable for the success of the project. Talk about that transition.
Well, I started, getting into real estate. I tried to do it as an agent. So I went out and got my license, number one, because I wanted to be more educated on the process and everything about real estate. And then I knew you could kind of do it on the side, right? And so I started doing it on the side. I had started up my contracting business and was trying to do real estate on the side. I realized that I had a whole new respect for any agents out there that make that their full-time living. That is definitely a grind. And you realize how many agents that everybody knows, how many real estate agents do you know in your local community?
A ton,
right? And so if you're going to buy or sell a house, you're probably going to lean towards your sister or your cousin or your mom, whoever's closest to you and your family.
In my case, yes.
Right. So it's exactly. So I realized, okay, well, the license is really not what I want to do, grinding it out for income, but it's nice to have. I can do all my own comps, use it for myself. I'll use it here and there for friends and family, but it's not like an active business, the retail stuff. So anyway, I spent a good 15 years running my contracting business. And my goal for a long time really was just to take as much profit as possible and buy at least one income property a year. So my goal was essentially to make $50,000 to $100,000 more than my living expenses, which we kept at, pretty moderate rate for many years, especially starting a family. And so that each year I could sweep off enough for a down payment for a property. And so that's what I did for 15 years or so. I built up a really nice portfolio of my own, single family and small multifamily stuff. And I had my contracting business. And then at some point, maybe 3 or 4 years ago, I was looking back and thinking about how do I really scale what I'm doing? What do I want to focus on? I realized that my passion really lies in the real estate side, even though building that portfolio was a part-time thing for me. And it made a much bigger impact in my life financially. So I still have the contracting business, but my team is running that and running it really well. And I focus all my time right now as a real estate investor.
Yeah,
And
that's
so,
some great insights, right? When I listen to your journey, you talk about really coming up through the trades, right? Going to school, getting educated, getting hands on, realizing that, hey, there's an opportunity here to be on the other side of the table. But for you, you really wanted to educate yourself. And that's something I think is coming through in your story, right? So you got your license to learn more about the space, to go out there, realize kind of quickly, man, lots of people know real estate agents. Maybe that's not the exact way I want to create wealth here. But you had the contracting business as well. So you did that, kind of bought your own properties for about 15 years before you really decided to branch out and really focus more on real estate investing, still having a construction business, but really focus more on the investing side. I want to go back because I know a number of investors and folks who want to get into real estate who would follow a very similar path to say, hey, I'm gonna get my real estate license, right? I want to become an investor, so I'm going to go get my real estate license. As you reflect back, how important or valuable was it for you to go get your license specifically for being a real estate investor?
yeah, for me, it was, pretty important because it really gave me the inner working knowledge of transactions and the behind the scenes data that I needed to make educated decisions. And when I'm looking to buy a property for myself and it's 9 o'clock at night and I would need to deep dive into the comps, like I don't want to have to rely on somebody else. But I'll also say that, my primary means of earning income and everything, like real estate is an active business for me. Right. And I was doing it on my own before, but it's the best, real estate and construction together. That is my business. And so if I was somebody that was looking to build a real estate portfolio passively, like maybe the best use of my time is in my doctor practice or my legal practice, or if I'm a salesperson for a firm, like, and that's the best use of my time. Is it really worth it for somebody like you to go out and do that? Maybe, maybe not. I think it just depends on how active you want to be. You know what I mean? Because learning, when you mentioned learning was a big part. Yeah, for 15, 20 years, I learned. That's all I did. Like my vehicle was a real estate university, listening to podcasts like yours, audiobooks, really just every day as I was driving around running my contracting business. I was constantly learning about real estate. And so I guess it just depends on how active you want to be in it and what your end game is, really.
I think that's really good points, right? You have to focus on the end game first, because I know for some people, they do what you've done, right? Whereas, hey, I'm going to be hands on for all of real estate. I'm going to do the construction side. I want to do the property management side. I want to do, the acquisition side. So it helps to know all of those different things if you're going to be that hands on and involved in almost every transaction. Versus if you really want to be passive, if you are a high income earner, really looking to put your money to work, well, maybe you don't need to go get your real estate license because you're not going to practice as much. Sure, it can help you to have access to deals in the back end and log in and check comps and all that stuff, but that's probably not the best use of your time, right? The best use of your time is earning that high income, vetting potential partners who can go out and do that legwork on your behalf, and then partnering with them or investing with them passively. In the middle, though, there's this person who wants to be active, right? This is the thing they're doing, but maybe they don't have the construction business or the other thing. And that's where I see people who run into challenges where they think, hey, I'm going to become a real estate agent, and that's going to be how I earn my income, but I'm also going to be able to grow into an investor based on being a real estate agent. And I think they run into the challenge you started to allude to, which is, it's hard if that's your main source of income and you're trying to be an investor if you don't have, traction and kind of a database and book of business built up. Because again, starting out, one, you're unproven. Most people you come across know someone else who's a real estate agent, and it's hard to get that initial traction. For someone who was in those shoes, if they came to you and said, hey, think about getting my real estate license, I'm going to do it full time, but I really want to invest, what kind of guidance or feedback would you give them?
I would say it's never a bad idea to get your license. And if you want to be actively involved in investing, then it's never a bad idea. I mean, and you can make a little bit of money on the side for sure. But I would also, have an honest discussion and what exactly are you looking to do out of here? and make sure that they're prepared for whatever they're thinking, because a lot of people want to get into real estate, but I think real estate is always an investment. It's not really a great place to bank your paycheck on. And so I still have my other company. You know what I mean? I think I think real estate is a wealth building engine, and you need to also have an income engine. And so whatever that income engine is, that's what keeps the wealth engine moving. But if you don't have an income engine, or you're relying on selling properties or flipping properties or whatever, that's a risky place to put all your eggs for your income.
Yeah, I think I read something, or I interviewed a couple different agents and brokers, and there was a stat. And I don't remember the numbers, so I'll have to look it up. But it was shocking of what the average real estate agent actually makes in their first
Yeah.
year. And it was like, I don't know. I know it was way less than what most people probably think. And I think I said something that like 70 or 80% of agents don't even make it to year 3, right? It's just some shocking data when you think about it. The reason I bring it up is it sounds good in theory when people are saying this strategy. But I think the reality for most people, especially when you're starting out, is year 1 is going to be tough. It's just, if you're just going to be a real estate agent, year 1 is going to be tough to drum up that book of business. Which is why I think it's important for, like you said, if you're going to flip houses or you've got some other means of income or generating income, and pairing that's awesome. But to expect to earn your income on a 100% commission based job in a highly competitive field, that could be challenging. So you'd certainly want to just maybe take a step back and just think through, hey, what's the reality? What do I need to do to stand out and succeed? And what are some realistic expectations that I can set for year 1, just to make sure, you don't jeopardize yourself or burn out before you even get started?
Yeah. Well, it all depends on the individual, what they're willing to put in, and it can be very lucrative, but it can be a grind. That's for sure.
Yeah, let's switch gears, man. We talked about you kind of growing. You mentioned the first 15 years, you slowly started to build up your portfolio. Then about 3 or 4 years ago, you realized your passion was really on the real estate side. Explain to us about that transition for you, that enlightenment, and what that looks like today.
Yeah. So, I think I was doing a lot of reflecting and thinking about like the Pareto principle, the 80-20 rule. And I think, a couple of books had really inspired me. Like one of them was the 10X is easier than 2X, maybe a couple other ones really just had me deep dive. But also what launched that, I guess, is before that, I started a personal BHAG, a goal. I called it 5 years to freedom. And so that goal, I started that in 2017. The goal was to build up enough rents to where I would be consider myself financially free just off of rents, not from my contracting income. And so that goal was to get to $20,000 a month in pure cash flow. And you talk to a lot of people, maybe somewhere between 10 and 30,000 bucks. And so I every day I just woke up inspired, trying to make more money to buy more properties. I did that. I achieved my goal. Right. And so I think at that point I had kind of like this safety net to where it allowed me to maybe subconsciously move forward with a little bit more risk. But I took a while. I converted the structure with my contracting business. I empowered some of my key team members, and slowly but surely got myself out of the integral operations and delegated more and let them take on more responsibility, and just started focusing on real estate. And at that point, I realized I had never known before, but I realized you can partner with people. You can raise capital. You can do joint ventures. There's all these cool things, ways to leverage other people in real estate that I never knew about. And so it opened my eyes holy smokes, you mean I can do more of what I love? And, this craft that I've kind of perfected on my own for the last 15 years, I can do more of that, and the bottleneck doesn't have to be my personal bank account. That's amazing. So I started diving deep into that. And so now, we put together partnerships. I do a lot of JVs with high net worth individuals or small equity groups. And then, we'll do some syndications here and there also. So that's been the last, few years. And so far it's going well, because I didn't really, luckily I didn't know that I could do that or really get into it in the peak of the market, 2021 and 2022. I was still playing with my money then. And, I bought a few deals, but I bought them right. So there's no distress. And then 2023, after things shifted, I started putting together some JVs and everything's all good.
Pete, I love it because you mentioned just educating yourself and, listening to books, podcasts, other things, educating yourself as you were growing your portfolio. But a few years ago, as you got clarity on your goals, 2017, you put together a 5-year to freedom plan to get, 20K in, cash flow a month. And as you started doing that, it really allowed you to hone in on what you wanted to focus on. You realized it was real estate more as an investor, but not being limited based on how much money you had in your bank account. And that freed you up to start partnering and JVing and stuff like that on other deals. Take us back to that moment and that aha, because for you, being an investor for 15 years and then having that aha moment, maybe later than what most of us, come to that conclusion. And I would imagine you've heard of this, right? I'm sure you've come across folks who are partnering and doing JVs or whatever, prior to that. So what was it in, sounds like 2022, 2023. What was it in that moment that went off where you said, this is the solution and the timing is right?
Well, I think prior, I had the mentality of a small business owner that was maybe keep it small and keep it all. You know what I mean? 100% equity, full control. I didn't have to answer to investors. I didn't have to do any of that, which is good and bad, And then when I realized, if I partner with people, basically it would allow me to do more of what I love. Because what I realized is that this is my passion. It's my ikigai, if you know that term. And it's what I want to do more of. And so if I partner with people for the capital side or just in different capacities, it just allows me to do more of what I love, which is fulfilling for me. And so that's what it came down to.
Our listeners may not be familiar with the term. So would you explain ikigai?
Oh, okay. So it's like a Japanese phrase for the intersection of 4 things. I might butcher it, but it's what you love to do, what you're skilled at, what you do well, what people need, and what provides value to others. So those 4 things, whatever's at the intersection of that you do, is considered your ikigai. And if you can marry those all together and identify that, it's probably something that you want to hone in on. And for me, that's what I identified. And there we go. I took action and honed in on it.
So when you made that transition mentally, you mentioned you initially came through this with the mindset of keep it small, keep it all. But then you realize, hey, you know what? I can transition, we can scale, we can partner with others. That's going to allow me to do more of what I love. Did you have people in mind? What did that look like on those initial partnerships?
I didn't have anybody in mind. What I realized is most of the wealthy people that I came across used leverage in a number of different ways. And I was used to using leverage financially with banks, which is why I love real estate. But there's a whole nother lever, which is people. And, any small business owner uses leverage with people. They hire people to go do the work. And I use that in any business, like my contracting business. You're leveraging people for their skill sets, but I wasn't using it in real estate. And so what I realized is that this is just another level of the game. It's leverage. And so, if you've got money and you don't have the time or experience, you leverage me to do all the work. If I've got the time and experience and you've got the money, it's the other way around. So it's leverage, and that's how you get the most output for the minimal input, and it's a win-win when you can find the right people. Shoot, I think I went off on a little tangent though. What was your question? We're talking
about your initial partnership, right? So you realized it was leverage.
So I reached out to friends and family, essentially. Friends and family. I started putting the word out to people that I knew. And it was funny because all the time while I was building my portfolio, I did it in the closet. I didn't tell people about it. Like my employees didn't know, my best friends didn't know. I quietly built up this pretty nice portfolio all on my own in the closet. And I didn't tell people because I was scared of being perceived as wealthy. I didn't want that perception. I didn't want my employees to think, oh, well, Pete's this wealthy guy. We don't need to squeeze out an extra percentage or 2 on profit on this job, or this job could take a few more days. He can afford it. You know what I mean? And I just felt like there was going to be this negative perception. So that was a big mental hurdle that I had to overcome, to let people know that I was not new at real estate. Like when I started raising capital, to let people share what I had built, the track record that I had, and be a little bit more public about that. But initial was really just friends and family.
There's a lot there. So you started with friends and family. You had to learn to build in public and share more of what you were doing. But you had this concern that you didn't want people to perceive you as wealthy, for fear that maybe your employees wouldn't work as hard or they wouldn't push as hard on certain things. Maybe there's some other things with family that you had concerns with too. As you reflect back on that perceived fear, do you feel like it was warranted, or do you feel like that was really a limiting belief?
Both, honestly. It definitely was a limiting belief, but it started because as a contractor, you find that most clients want to hire the hardworking guy that is like, not necessarily struggling, but the guy that's not wealthier than them. You know what I mean? And so it's the perception. You never want to drive up in you can't drive up in an exotic vehicle and get a contracting job. You know what I mean? And so it's the perception, right or wrong, that other people have about you. And I think that's wise in the contracting business for sure. Now, on the real estate side, if you're a broker or an investment operator guy like me, you're raising capital, you have to look a different perception. You know what I mean? And it's all about who is your client that you're talking to and what do they expect, I think. Does that make sense?
Absolutely. I mean, you're getting into the psyche, right? There's a psychological component to this. And it's interesting to understand both sides. And my family, we always did, kind of blue collar work. So my stepmother had a cleaning business, and I remember distinctly one time she had a Mercedes-Benz 3 Series, right? Or the C class, whatever. So she pulls up to a job, and the owner of the building was there, and he literally looked and saw her pull up, and he said, this was like 20 years ago. He looked and said, "I must be paying you too much." Said it out of his mouth. I mean, you understand why the perception is there, but he literally, it was the first thing he said before he even said hi. Yeah. And that was the last time she drove that vehicle to a job, by the way. But that perception.
Yeah, everybody else that saw her was thinking it. They just didn't say it. Yeah,
exactly. And in the contracting world, you're right? Because everyone wants value. You want to make sure you get someone who's really good at that job, but you want to pay as little as possible. And for whatever reason, people feel like they can squeeze that contractor where they're going to find this perfect guy. I interviewed this guy on my show, Multifamily Insights. And when I first launched it, I was flipping houses. And as most investors do, right, you had a full-time job. I was flipping on the side. And I was talking to him about like just some of the challenges I was having finding a good contractor. And he stopped me and he said, "You're never going to find a good contractor." He said, "The reason is, one, your definition of good, you're bringing your corporate, white collar mentality to this. And you're expecting someone to do a good job on budget, on time, clear communication, great crew, all that stuff." He's like, if they were that good, they wouldn't be working on your project. They would be doing a residential home and making $30,000 on a kitchen rental, right? Or they would be building up a Starbucks or something like that. So he's like, that A-class contractor that you have in your head, they're going to go take on a more profitable job. As an investor, you're trying to get this guy to do a $20,000 job for $4,000, right? So you got to keep in mind, well, who's going to accept that kind of job when you're squeezing the margins like that? And that's the other side of it, right? It's like, yeah, you're right. Because if I got that $20,000 bid, I'm like, this guy's crazy. It's not crazy. He's just going after the wrong person, right? He should be going after that homeowner who wants that kitchen makeover versus me as an investor. And that just opened up my eyes so much. But kind of coming back to what we're talking about, that perception is real, where we want great value, we want great quality, but a lot of times people aren't willing to pay the contractor for it unless it's their personal residence or something where you really want to see that high quality marksmanship. But as investors, we want that value. And on the flip side of that, if you are raising money, if you are bringing people into your deal, well, they expect you to show that you're successful. If you're trying to raise money on a deal and you're driving like the Ford Pinto or something, like, yeah, it looks like this isn't working for you. I don't trust you, right? That's the perception. Again, people may not say this, but there is this component where they want to see that you're successful in what you do. So there's a duality that comes into play. On the construction side, you want to be successful where you're good at what you do, but not so successful that people are concerned that you're price gouging them, right? But on the other side, as an investor raising capital, yeah, they want to see that you're good at what you do, you're making a good living, and they can trust you with their investment. So it's really interesting how that duality kind of comes into play. How did you balance that, wearing both hats and, trying to show different sides of your personality and your business?
Well, I kind of got out of the client-facing role in the contracting business. You know what I mean? And that was a long process. It was probably from my original like intent to really switch to the full execution. It was probably about 3 years, honestly, maybe more. But slowly but surely, I started getting out of the client-facing role. And still today, like I don't live like lavishly. I don't drive super fancy cars, but I drive a Volvo now. And if I was going to clients' houses to sell, construction services, I probably wouldn't,
Yeah. I think it's just interesting how the psyche comes into play, right? When you're talking about homeowners and investors. And again, this is something we all have to be mindful of, because maybe the way you are coming across, it may not be intentional. It may just be your everyday life, but others perceive it differently, especially based on what they're looking at you to solve. So again, if you're someone who's looking to raise capital for deals, be mindful of how you're coming across. They want to work with someone who has a good track record, who knows how to invest, who's had successes. So that's going to be important for them. Maybe less on the luxury things and all that, but certainly they want to see that you're successful. Versus if you are in the service business or the service industry, they want to see that you're good, but not that good. So there's a balance of how you come across and what that perception is. So definitely something to keep in mind. Let's fast forward on the business today, right? So the last few years, you've really focused more on building relationships with other investors, JVs, partnerships. What does the portfolio look like today, and what kind of projects are you after?
Well, right now we have, I think about 25 properties. It's a mixture of single family and small multi. It's about 150 doors. And yeah, JV partners, we've got a few projects going on right now. We're always looking for new potential JV partners. I don't just work with anybody. I want to make sure that we've got alignment, because it's a little bit more of an intimate relationship. But I always like to say we date before we get married in that environment and start with one deal. But for those, I usually partner with people that can, put at least $1 million into a deal at a time, which allows us to buy maybe a $2 million property, depending on the renovations. And then we go from there. The idea really is to partner with people that want to build a portfolio over time. We start with one, but I'm looking for people that want to do, 1 or 2 a year, or raise money together to build a portfolio. And then every once in a while, when it's right, we'll do a syndication so that we can open it up and accept outside investments. So that's about it. Yeah, I mean, I'm always on the hunt for deals, always on the hunt for good partners, and buy my own deals. I partner with people. I invest my capital also. Like I have an IRA, self-directed IRA. And so I invest with other people as well, because I can't invest that money legally into stuff that I manage. And I'm always just looking for cool people to partner with.
Yeah, Pete, I love it, but you kind of glazed over something that was a pretty big comment. You said, you typically are looking to invest with people or partner with people who have $1 million to invest. That's a lot higher than the minimum that most investors or capital raisers are looking at. So talk to us about that. How are you kind of building out your network, or kind of broaching the topic of, the capital side and what folks have to invest, and presenting the deals and the opportunities?
Mm-hmm. Well, it depends. Yeah. I mean, these, like I said, they're high net worth individuals and small equity groups. I found that a lot of them have invested in these big syndications the last few years and just have been burned. And they've put a lot of money behind them, and they, as an LP, they had no control, no voting rights, no nothing. And so I found that there's a kind of a need or a definite want for these people to partner with an individual and like leverage me as the operating partner, but still get a lot of say so, voting rights. And so it's a different situation than investing as an LP. I still try to make it, as turnkey as possible, but decisions are made together, big decisions. Okay, are we going to buy this property or not? Is the big one. And then also when it comes to sell or refinance, like, that's a decision that we make. As opposed to being an LP when you've got your hands tied and it's really just, there's nothing you can do. So it's definitely I felt there's not a lot of people doing that. I was already doing it with friends and family. So I like that route anyway. The small multifamily is really my niche, and we get some really nice deals in like the 10 to 50 unit type space, buying from mom and pop, owners. But, again, like, for the syndications, we want to open that up, and usually we'll do like a $50,000 minimum for an LP. Some of them will even have room for a JV partner, and then we'll still raise from LPs as well. It just depends on the deal and the partners that are ready to make a move, and we take one step at a time.
Yeah, Pete, you hit on just the changing landscape, right? Many investors who've invested passively in deals over the last few years are not seeing the returns and the results that they wanted, that they expected, whether those deals are not performing or they lack, any kind of control or the ability to vote. So maybe they're more interested now in smaller partnerships where they do have voting rights and they can be more involved in those deals. So those JV deals are more appealing to them at this time. Are you seeing investors who are looking for more cash flow, more appreciation, tax benefits? Like, what are your investors typically looking for in these deals?
Yeah, it's across the board. I would say the smaller investors that are putting in 50, 100, 150 a time, they want cash flow and appreciation. And the bigger investors that I'm partnering with $1 million or more, they need the tax benefits, and they're looking for appreciation. I realize the guys that are playing at that level, they're not really concerned with the cash flow. And the reality is cash flow is in real estate is, I don't know, it's kind of a myth. Everybody's preaching this passive income, which it's nice, but you've got to have it for sure. It's definitely part of our strategy, but you're always going to have unexpected repairs. You're going to have capital expenses. Lately this year, like most markets, your vacancy has crept up, right? And so you're going to have more turnover costs. So the cash flow is nice, but it's really a buffer. And I found that the people that are investing $1 to $5 million or more in a deal, it's more about the whole picture. Are we buying it under value? What kind of value are we adding? What does a potential exit look like? How safe is it? And what is the upside? They're not playing the game for 5%, cash flow. Does that make sense?
Definitely a difference in that $50,000 investor and that $1 million investor. You're talking about the 50K investor looking a little bit more for cash flow and appreciation. That larger equity investor is looking more for appreciation and the tax benefits, way less concerned with the cash flow. They're playing a bigger game and looking at how this property fits into their overall, portfolio and wealth building strategy, as opposed to trying to live off of the income and the distribution. So really good insights there. As you are working with kind of both investors, what tips or insights would you give when talking to those higher net worth investors as opposed to maybe the $50,000 investor?
The tips for the higher investors is, it's about alignment and leverage, really. Those people have built really big businesses. They're seasoned investors. This is not their first investment. And they are betting on the horse, the operator. It's a business partnership, right? And they get that. People that play at that level usually have several business partners throughout their businesses, or they're investors in other private equity deals or real estate. And so it becomes really trust and, and voting rights and finding alignment. And then the beauty with real estate over a private equity investment, into any business, that's a long-term arrangement, the private equity. It's a lot more risky. With real estate, there's a hard asset. You buy one property, and if you find that you're not aligned after that one, there's no need to continue purchasing, right? But hopefully you find alignment and both partners really want to continue buying more. And then you build a portfolio, and that can be really special.
What are the challenges or drawbacks of that structure, particularly working with a high net worth investor in these JV deals?
Well, the challenge and drawbacks, the challenge is always really, trying to predict the future and set things up for the worst case scenario. So, in the operating agreement. And so I've got like kind of the operating agreement template that we use, but each time it gets slightly modified for what we're trying to do. But it's really thinking about, any business arrangement, whether it's business or real estate, you want to think, how does this dissolve in the worst case scenario? And if you align that up at the beginning, it avoids so much time, effort, and expense on the back end. Hopefully it never goes there, but you've got to have those conversations up front.
Yeah, think about, again, the end in mind. So if you're investing, we talked about this about getting a license, but you have to understand, like, hey, what is the end game here? So the end game, are we selling a property? Are we going to hold this forever? Like, what does that look like? So you can then reverse engineer what needs to be in the operating agreement. What happens if one partner wants to sell and one partner doesn't? Like, all of those kind of things you have to work through. Do you have a preference between syndication and JV? Like, what do you enjoy more?
I like the JVs. I'm not raising capital is not my specialty. I'm figuring it out.
Says the guy who's raising $1 million checks at a time.
Well, it's one check, and so I'd rather I want to partner with people who already believe what I believe, right? I believe that we are in the bottom half of a real estate market cycle. I believe that real estate is an incredible long-term wealth building strategy. And I am trying to acquire as much real estate as I can right now, right? For the long term. And so, I don't want to make anybody lose sleep at night because, the next year, 2, 3 years might still be a little bit rocky. So I'm looking to partner with people that believe what I believe, have the wherewithal to invest and want to leverage me as an operator. But at the same time, I'm not jumping into those relationships with just anybody, because the last thing I want is to be tied up into a partnership with somebody that I don't like working with, right? It goes both ways for sure. And so, we want to have several conversations up front, walk through a few different deals, do the due diligence, and see how that plays out. And just that practice of doing that, you get to know somebody really well, and then you see where it goes.
You talked about really the vetting process of getting to know each other, walking through some deals and, talking through those things just to understand what they like, what they don't like, their working style, and, whether or not they're going to be a good partner. How long for you does that process take?
It depends. It depends. Definitely at least a few weeks. Depends on how quickly things are looking to go. I've got others that I'm talking to right now, and there hasn't been a deal come about yet, but we're engaging in those discussions along the way, and we'll see what happens, right? And so I think it could be anywhere from a month to 12 months.
There you go. And it just comes down to getting to know people, right? So asking good questions, getting a sense of what their values are, what their goals are, how they handle situations. Laying all that out, you're going to get a good vibe for people, and, trust your gut. I think that's the other thing, right? Sometimes you meet someone, and it's very easy, especially when you're starting out, when you meet people, if they've got money to invest in your deals, you can just get excited and get blinded by that and maybe ignore the vetting process. And that could be a huge mistake, especially down the road if things don't go well. So definitely take the time to get to know people, build those relationships, and make sure it's a mutually beneficial relationship, not just because someone has money. All money is not good money. So definitely make sure you understand those things.
Right.
Yeah. Hey, before we move forward, I want to let everybody know we've got the best ever conference coming up here, and it is our 10th anniversary. That's right. Year number 10 of the best ever conference. So I'm excited to go. I've made 8 so far, so I'll definitely make sure I get back to number 9 here. It's a great event. It's one of the things that really helped me catapult my investing career. It's building connections, networking. All of the best ever podcast hosts are going to be there as well. So make sure you check it out. Get your tickets. You can save 10% by using the promo code podcast10. Just go to besteverconference.com, use promo code podcast10, and get 10% off of your ticket. All right. So, Pete, we were talking about, the partnerships and the operating agreements and vetting those potential partners to scale your portfolio. You mentioned today you've got about 150 units over 25 properties. How do you manage these properties today? Are you vertically integrated? Do you use third-party management? What does that look like?
We third party the property management and we do the asset management. So myself, I have got an assistant asset manager. We've got an in-house maintenance guy. So we bolt on to the property manager and basically supplement. What I've found is any property management firm in the last year has been completely slammed with vacancies, right? And my biggest pet peeve is the timeliness of getting them released, even just the timeliness of it going vacant till when the property manager visits the site drives me nuts, right? In most cases, it's a 1 to 2 weeks out because they've got hundreds or thousands of vacancies they're dealing with. So actually, my assistant, we've kind of taken the reins on that. Luckily, our property managers, they're usually willing to work with us. They understand it's an added cost that I've taken on in-house for sure, but being able to control that and supplement the leasing, the maintenance, generally the work orders just get processed through the property management firm. They send them over to us because my handyman and our vendors will do them a lot cheaper than theirs. So we utilize them for like the accounting, the bookkeeping, the emergency calls and stuff like that. And right now we're doing what we can to supplement. And so, for example, I've talked to 2 property managers last week. One of them is mine. The other one, actually, I use both of them for a couple properties. Their occupancy rate is averaging like mid 80s this year in Phoenix, right? Which is not good. And if you've got properties in Phoenix, you've probably experienced some of this. 2 different property managers have said that, and ours is, our portfolio is like low 90s. So we've been able to supplement, turn things over a lot quicker, get jobs done cheaper than just relying on them. I'm trying not to get into the property management business.
Sounds like you are.
But I know, like, once you start doing more and more, it might be inevitable. I really don't want to. I think like our focus really is in asset management, which to me is optimizing and strategizing, right? And managing the manager. But whatever, we're doing what it takes to outperform this year. And our properties are, for the most part, all outperforming what the market says and, what we've done in the past. And so it's working. It's costing me more money to do that. But so far it's working and we're happy with the results.
Yeah, it's an interesting structure, right? I mean, one of the biggest things we know is the execution matters so critically. It's one thing to find a great deal, raise the capital for that deal, to close on it, but then you got to go execute. And that's something that has been a challenge for a lot of operators over the last couple of years for reasons you've mentioned or alluded to, right? Occupancy has gone down. There's been a lot of new supply. Interest rates have remained high. So that's been a challenge for a lot of people, not to mention labor costs and just labor shortage. So you take all of those factors and it's really hurt the NOI or the performance of a lot of properties. And that's been a challenge for many, many operators. What you've done is you've kind of taken on more ownership of some of these key things, right? You talked about the maintenance. You got your own handyman. You are now helping out with the leasing and helping to make sure that you have someone help with leasing those units to try to cut down that turn time. That's one of the biggest things that, eats into profitability that very rarely gets talked about. When you have a tenant that moves out, how quickly can you get that unit turned? The best operators I've seen can do that in a matter of days. But it also is not uncommon for this to take months for some guys, right? And I'm not talking about getting it leased in field. I mean, from the moment that person leaves, you get it, your PM in there, figuring out what work needs to be done. You turn it, you get that work, or you paint, you do whatever has to be done. You get it, checked off to say, yep, hey, it's ready to release. And then you actually get it marketed. And sometimes you can do a lot of that in parallel, but sometimes you can't. If it's a heavy turn, you can't really show those units, and that can make or break your business, man. And I know a lot of newer investors, when they look at properties and they start looking at numbers, they'll say, "Oh, it's 100% occupied." Great, so they'll run their numbers as if it's 100% occupied. I'm like, I promise you, even if it's a 2 unit, I mean, maybe a 2 unit, but if you got a 10 unit or anything like that, there is no way it's 100% occupied every day of every year. Now, they may end every month with it being 100% occupied, but somebody moved in or moved out at some point. I promise you had a couple of days where it was, so you've got to account for all that in your numbers. And again, where you can create value is being able to operate more efficiently, being able to cut down that turn time, being able to be more efficient, to save on your turn materials. And that all sounds good in theory, but in practice, it can be challenging, especially if you don't have the right third party team. And I know a lot of investors have struggled with that, especially over the last couple of years. So you guys have been more proactive in just saying, hey, we got our own maintenance guy, we got our own process here, we got our own this, and you're kind of working with the third party management team to do that. But you're really relying on them for accounting, the bookkeeping, a lot of the back end things, the emergency maintenance requests that come in. That's why I jokingly say, like, sounds like you are, because it sounds like you got a back office staff who's handling the emergency calls, the accounting and the bookkeeping. But when we think of property management, we typically think of leasing. We typically think of maintenance. It sounds like you and your team have taken on a good chunk of that. So at a certain point,
when you rely on a company that's got hundreds of units, thousands of units, you're just one of those. And so sometimes you got to step up and just grab the bull by the horns. You know what I mean? Not a lot of property management companies will allow the ownership group to do that. And so we've got a special situation, but it's working out well.
Can you talk more about that? Because I think that's a challenge a lot of operators face, right? Is that they feel they don't have the authority or the power to just take the holds, right? They're relying on that property manager, even though they're not getting the results. And you just talked about, hey, in Phoenix, most of those groups are in the 80% occupancy range while you're in the low 90s. Many people feel like they're handcuffed and they can't. And the only alternative is to fire that property manager and then self-manage, which has its own set of issues. So they reluctantly stay with this PM that is underperforming. Can you talk about maybe your philosophy of taking more ownership and maybe negotiating and working with the PM firm so that you can get it exactly how you want it?
Yeah, unfortunately, like a lot of the bigger complexes where they have, on-site property management in these big firms, you really don't have any control, and that's kind of frustrating. Luckily, the ones that I have, like small multifamily, 10 to 50 units, it's a different type of property management firm. And then I've got others that do single family. And so, you've got to have a good working relationship. And again, you want to support, not mandate. So it's more about having a working relationship with them and allowing them to understand, like, hey, I want to help, not tell you how to do your job. Like, I understand the market dynamics. I understand how swamped you guys are. I can help on our properties, so it at least lightens the load on you guys a little bit. But like one of the things that we embraced is putting the listings on Marketplace, on Facebook Marketplace.
Yep.
And as a property manager to do that for hundreds of vacancies, no way. All the messages. Hey, John, have you ever listed a property for rent on Marketplace?
I have, and I've had my PM do it, and bless her soul, because one, you got to use your personal account too. Like, you can't use like the business or the property. Like, it has to be a personal account. And I'm like, I don't know if I feel comfortable with you putting your personal account out there either.
Yeah. So that's something that we realized wasn't going to happen with the property management firm, but we could do it. And it's made a huge difference. There's a lot of tenants on there, a lot. And you got to deal with so much BS with all the messaging and stuff. It is a lot of work. But I mean, we've put in a lot of tenants this year from that. And that never would have happened by, just relying on the property manager to post their listing and syndicate it out to the big online platforms. So that's just one example of how we've supplemented and made a difference,
Pete, I love the example. And I think the one takeaway for me is, at the end of the day, when you're the asset manager, you have to manage the asset. And sometimes that means stepping on toes or, providing a solution, and you can call it overreaching, but that's your job. Your job is to do what the asset needs, not just to listen to the property manager and give suggestions. Sometimes you got to roll up your sleeves and get a little dirty and, push people, if they're not looking to move themselves, into the direction that you need. So I appreciate you sharing that and just kind of reinforcing that to our listeners, that it is ultimately up to you as an operator to drive results for yourself, for your investment, and obviously if you have investors, for those investors. Hey, Pete, we were talking a little bit before about partnerships and JVs. I know you have a deal room. Can you share a little bit more about the deal room and how that works?
Yeah, it's an online event that I created. I essentially created an event that I wanted to attend. And so we're going to be hosting our third one coming up on December 4th. The website is dealroomonline.com. Dealroomonline.com. You can go register. And so what it is it's kind of an online Shark Tank style. We get 5 or 6 operators who have deals in different asset classes, and they pitch them for 5 minutes apiece. So we'll get different types of real estate, multifamily, industrial, self-storage, mobile home parks. We also bring in some private equity plays. We've done pre-IPO deals. We've had 2 oil and gas presentations. And so really, I wanted to create this investment platform. Like I said, I'm an operator, but I'm also an investor myself and always just looking for cool people to partner with. And so this room allows that to happen. And it forces the operators to really drill down into a 5-minute pitch. So what's the most important thing that we need to know? Which as an investor, it's like, all right, that one's not for me. That one's not for me. Hey, this one actually seems pretty interesting. I'm going to follow up with this person afterwards and see where that goes. And so, yeah, we're still fairly new. We're going to do our third one coming up on December 4th. And we're looking to, every time we do it, we're looking to make it better and better. So if anybody out there, if you've got a deal that you want to pitch, you can apply to to pitch it. Not everybody gets to pitch, but you can apply. And if it's something that I think might fit, we'll have a conversation. Or if you just want to check it out, or if you're looking to place capital, I'm also looking for panelists that could help me ask some really wise questions, investment questions, and maybe take that a step further.
Well, awesome. Well, hey, we'll make sure to put a link to that in the show notes, Pete. It sounds like a great platform and, more importantly, another way to get connected with other investors. And my big takeaway from our conversation is wherever you're at in your multifamily journey, one, you got to understand the options. You started off trying to build up your own. You talked about, stay small, keep it all, and being able to grow from that mindset to recognizing that there's power in investing with others, to having partners, to not being limited with the amount of money in your bank account. And that has really allowed you to grow and blossom and build up this 150 unit portfolio where now you've got these partners. You can grow, you can bring on other folks, you can, hire your own handyman. Like, there's a lot you can do once you start to grow and get scale, but also talking about the importance of partnerships, vetting individuals and building these relationships, recognizing where your strengths lie. And that allows you to kind of really share that with other folks and bring them into your fold. For folks who want to learn more, please feel free to check out Pete in the Deal Room. We'll have a link to that in the show notes. Pete, thanks again for being a great guest, to coming on the show today. We look forward to staying in touch with you, and I hope you have a good one.
Okay, John, thanks for having me on. We'll talk to you soon.
Absolutely. Hey, best ever listeners, thanks for joining us for this episode of Multifamily Mastery. I would love to connect and catch up with you. If you're planning on being at BEC 10, please let us know. Get on the BEC Masterminds website, and you go to becconference.com, learn more and connect with us there, and we will see you soon. Take care, everybody.